All right, let's break down a trading strategy that's all about clarity and efficiency. It's called the GOAT setup. So if you're a day trader and you need a system, a real step-by-step approach that doesn't force you to be glued to your screen all day, then you're definitely going to want to stick around for this.
Does this sound like you? You really want to trade, but you just don't have hours and hours to sit there watching the charts, just waiting for some long-term story to develop. I mean, your time is valuable, right? You need a strategy that gets that. It's a super common challenge for anyone trying to squeeze trading into an already busy life. So what's the secret sauce here? Well, the entire philosophy behind this setup can be boiled down to 3 simple words. Basic is king. The idea is to ditch all the complicated indicators and confusing rules. The real goal here is pure, simple clarity, to know exactly what's happening on your chart right now.
So that brings us right to what the source material calls the day trader's dilemma. Look, a lot of us, whether it's because of work or family or whatever else, we just can't sit around waiting for those epic multi-day chart storylines to unfold. We need a method that gets the job done within a single session, not over the course of a week.
And here is the proposed solution, the GOAT setup. It's a system that's specifically designed to help you pinpoint just 1 or 2 really high-quality trading opportunities each day. We're not talking about taking a dozen trades here. The focus is all on precision and efficiency, not on volume. It's about quality over quantity.
Okay, let's get into the mechanics of this thing. Before we walk through a real-life example, we've got to understand the core principles. We're going to build this from the ground up, starting with how we use different time frames.
The system uses a multi-time frame approach, and it is absolutely crucial to understand the job of each one. Think of it like this. For the big picture, the bird's eye view of the setup, we're using the 4-hour and 1-hour charts. But for the actual execution, for getting that precise entry, we zoom way in, down to the 1-hour or even the 5-minute chart. This way, we get both the larger context and sniper-like precision.
So what are we actually hunting for on that big 4-hour chart? Well, the strategy is super specific about this. We're not interested in just any old line on the chart. We're only looking for a few key things. Fresh A levels, fresh V levels, major breakout points, and those classic reversal patterns like a Quasimodo or a Head and Shoulders. These are our high-probability hunting grounds.
Now, you're probably asking, what on earth are A and V levels? It's simple, really. Just think of them as those sharp, pointy turning points on the chart. A V shape marks a sharp bottom and a quick reversal up. And an A shape, well, that's a sharp top and a quick reversal down. The reason these are so powerful is that they show you where the market made an extreme decision, a moment where one side, buyers or sellers, just completely took over. And here's a huge pro tip, something you really want to pay attention to. The source material strongly advises that you avoid using 4-hour gap levels for this setup. Now, I know they can look important, but they often just create a ton of noise and confusion. And that goes against our main rule, right? Keeping things simple and clear. So, it's best to just stick to the approved levels.
Okay, so now that we know all the core ingredients, let's put them together into our standard operating procedure, our SOP. This is our repeatable step-by-step checklist. It's the game plan we're going to follow for every single trade.
Here's the roadmap, nice and simple. Step 1, you wait patiently for the price to reject one of our key 4-hour levels. Step 2, you hop over to the 1-hour chart and look for a breakout of a recent A or V level. Step 3, mark that brand new engulfing zone that was created by the breakout. That's just a big, powerful candle that swallows the previous one. Step 4, this one's optional, but you can refine that zone on an even lower time frame for a tighter entry. And finally, Step 5, you enter when the price pulls back into that zone. See? It's simple and totally systematic.
Theory's great and all, but seeing is believing, right? So let's actually walk through a chart example step by step, and you can see how all 5 of these steps come together in the real world. Okay, let's do this. Step 1. We're on the 4-hour chart. The very first thing we do is find a fresh, significant key level. You can see it marked right here with the horizontal line. It's a super clear area of previous structure that the price is now coming back to test. Now, we zoom into the 1-hour chart. And as the price hits our big 4-hour level, boom! Look at that reaction. We get this strong rejection candle with a long wick pointing down. This is our first clue, our first signal that the level is holding and a reversal might be in the cards. All right, this next part is the confirmation stage, step 2. After that initial rejection, the price made a little A level. You can see that little mini peak. So we mark that peak and we wait. What are we waiting for? We're waiting for the price to break decisively above it.
That breakout is our trigger. It's the market telling us, hey, the buyers are in control now.
Now, that big breakout move is super important because it creates our entry zone. That powerful candle that smashed through the A level, that's our H1 engulfing zone. We mark it here in the box. This now becomes our high probability area where we want to look for an entry when the price comes back down.
Now, for those of you who really love getting a super precise entry, you can actually drop down to the 5 or 15-minute charts once price gets back to our H1 zone. On these lower time frames, you can look for another little confirmation pattern, like a smaller engulfing candle, a tiny Quasimodo, or a trendline break. It's perfect for a real sniper entry.
And here it is, the final trade all laid out. The entry is taken right as the price pulls back into our H1 engulfing zone. The stop loss is placed in a logical spot right below the recent low. And the target? The next major 4-hour key level way up above. It's a complete, clean, well-defined trade from start to finish.
So, to wrap it all up, let's just boil this down. What are the big takeaways? It's simple. We start big picture, on the 4-hour chart to find our key level. Then, we wait for a specific trigger, that breakout on the 1-hour chart to confirm momentum is on our side. And finally, we execute the trade on the pullback. This top-down approach keeps our trading so clean and focused.
And that really brings us to the final thought here. We've seen how this top-down approach, moving from a high time frame for context to a lower time frame for confirmation, creates this really powerful, repeatable framework. So the real question for you is, how could you take this same H4 to H1 structure and apply it to your own trading plan? Thanks for tuning in.